So I'm here today with Pablo Portugal, a Director of Advocacy for AFME, and Nicolas Veron from the Bruegel think tank and the Peterson Institute for International Economics. We're here today to talk about the Capital Markets Union, the European Union's flagship initiative to boost capital flows in Europe. So, Pablo, why is the Capital Markets Union such an important initiative for Europe?
I think the CMU project remains vital for Europe because the EU needs to reduce its over-reliance on banks to finance its economy. And the CMU project is also a way to help promote growth in Europe by ensuring that fast-growing companies in innovative sectors can access the financing solutions they need, and the capital markets can often provide those solutions better than banks. Bank loans are not always the best mechanism to help companies grow. And it's also a project that contributes to financial stability by ensuring that risks can be better spread across the financial system and are less concentrated on banking institutions.
The Capital Markets Union project has increased salience for the Eurozone, and especially with all the discoveries there has been in the last 10 years now, that the Eurozone is not working very well when it comes to shock absorption. When there is a shock in one country or in several countries, how can the financial system help address that and mitigate the shock as opposed to creating a dynamic of fragmentation that will make the shock even more damaging. Capital markets are essential for this. Of course, the Eurozone banking system is very bank-based. It will remain so for the foreseeable future, but the more capital markets integration and development the Eurozone can have, the more it will help to address this major aim of making the Eurozone financially more resilient.
So, for the Capital Markets Union to succeed, what need to be the priorities going forward?
It's a big debate, and I don't think there is a complete consensus on this. Even so, we're at the end of the Commission's term. We're going to have new elections at the European Union level in less than a year. It was a flagship project of the Juncker Commission. So far, when you look at it, not that much has been achieved. So I think the sense of priorities and sequencing is really important. From my perspective, the Commission has been wrong to deny the importance of the institutional architecture, especially supervisory architecture, in its Capital Markets Union project. We've seen in Banking Union how important getting the architecture right is. So I would prioritize a reform of ESMA, the European Securities and Markets Authority. The European Commission has made proposals. There is a lot of debate among the legislators. I think ESMA needs to be more independent, more resourced, with a more direct funding from the industry. And these are the issues I would put in front in the very little time that remains in this legislative term.
Pablo, anything to add to that?
I think from AFME's perspective, we would like to see two priorities taken forward in the next phase of CMU. One is addressing Europe's shortage of risk capital and promoting equity financing. And here we need to tackle a number of areas, for example, taxation, ensuring that there's no bias in favor of debt and against equity in the system, ensuring that citizens have incentives to invest in pension products that can allow them to access the capital markets. So there are a number of issues there to tackle. And I would also say another priority is looking at the long-term barriers that may be preventing the integration of EU capital markets. So we have barriers, for example, in the post-trade area, which were identified many years ago in the Giovannini report. Those need to be tackled. Barriers that prevent integration of secondary markets in Europe, the secondary markets ecosystem. And I would also mention insolvency reform, which is very important to promote cross-border investment and also to help tackle the NPL problem in parts of Europe.
Nicolas, anything to add on what might threaten the Capital Markets Union project?
And again, it hasn't achieved so much so far, so at this point it's more a matter of making it happen, making it real. And I think there is enormous inertia in the system. It's a big project. Capital markets are important structures of the economy. We're not starting from scratch. There is a whole installed base of established interest in the public sector, in the private sector. So I think what we need is really political energy into that project that will supersede those resistances, which are understandable, even in some cases legitimate, but shouldn't get completely in the way of the big picture interest Europe has in developing this.
Sure. And we haven't mentioned Brexit. Do you think that could threaten the Capital Markets Union project, Pablo?
I think Brexit could actually serve as a catalyst to really drive the next phase of CMU and tackle these long-term barriers that EU27 need to tackle to develop the capital markets in the EU. So I think Brexit could actually provide momentum, and I concur with Nicolas there. We need political momentum in the next phase of CMU to address the various issues where we have some resistance from member states and where market participants would really benefit from a more integrated ecosystem. As Nicolas was saying, progress has been slow. The proposals on the table are challenging. They require political commitment. They require careful negotiation. And that is why we shouldn't lose the momentum there.
I would add that Brexit unquestionably changes the nature of the Capital Markets Union project, but it also depends which Brexit. And so far, we don't even know if the UK will stay in the single market or not. To me, it's pretty obvious that Brexit is transformative for CMU, but how so, we don't know yet, because we don't know enough about Brexit yet.